You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose. Welcome to Masters in Trading Live. At Masters in Trading Live, we get on here every single day, 11 o'clock Eastern Time, to go over the market and share some of our very best thoughts. Today we got 4 topics for you. Here's the topic that keeps coming up: gamma and theta. When you're talking options, gamma and theta are just polar opposites. Polar opposites. I'm going to go over that. We get a lot of questions on this. Options versus stock. Options are stock. Options are just a derivative of stock. If the stock's at 10 and you want to buy the out of money 12 strike calls, you're just buying a little itty bit of stock. That's where you get your leverage from. That's what I'm going to explain. My third topic: there's a little small company called Apple. I think that we should buy Apple. I think that we should be long Apple because I think Apple is going to dominate over these next 2 years. And then the final topic is our earnings advantage. We just announced the earnings advantage program. You can head over, see the full video at mastersintrading.com/earnings. Let's get into the slide deck. You guys are going to like this one. I want to start out right here because every single day, Masters in Trading Live, we're always sharing our opinion about the market, and occasionally we're even sharing some trades for you. The last trade that we shared today is going to be June 27th. The last trade that we shared with our promotional portfolio, that's what I'm going over right now, is in Centine 1. Boom. So we shared this trade, entry date June 17th. We also shared GCT June 14th. That's right around a break even. But I want to talk about S because this is a free presentation and anybody could go and buy those options when we shared them. If you want to buy one, you have $104 of risk. You can never lose more. If you want to buy 10, you have $1,040 of risk. You can never lose more. That was just 10 days ago. Well, right now, S, it's not trading 2020. It's actually trading 2057. And so our 21 calls that we shared right here, 21 calls right now are trading $1.90. So we are going to work a limit order because I want to get out at 210. So limit, I'm going to sell to close the 21 calls, and I want to do it for $2.10 because I want to make 100% in just 1 week. That's a darn good trade. Hopefully you got that trade as well, but that's what we're going to do. We're going to work that level to get filled. All right, guys, it's time to go to school. Who's ready for school? We have a phony baloney stock here. It's going to be called it's going to be called MIT. Okay? It's a small cap, very, very, very bullish these next couple of years. But nevertheless, MIT, with 3 hours to go until expiration, is trading 20. So this is just the behavior until the stock expires. So I'm in Chicago, but Eastern time closes at 4:15. And so let's call this 1:15 p.m. And this is just any old stock, MIT stock trading at 20. This is an example because we want to talk about how these, look at Game trying to rally. Game's trying to rally 9%. Atta boy. Sorry, just got pulled in a different direction. This example, 3 hours to go until expiration. Let's see how the options behave. You may have to watch this back. MIT stock. Okay. Right now it's trading 20. A couple of years, it's probably going to be trading 100. We have 3 hours to go until expiration. The stock's at 20. The 20 strike calls are trading for 50 cents. Now, your delta, because the delta is 50.5, the equivalent stock is long 500 shares of stock on that $20 strike price. If the stock goes to 2070, those call options might be worth $1. The equivalent stock position is going to be like 700 because that's the intrinsic. But your position delta, it's like 70% of having all the stock, because if you had all the stock, you would have 1,000 shares, but you don't. You only have 700. Well, then the stock drops to 1920. Your call options are now 15 cents. The delta is 0.20 because the delta is saying, hey, there's only a 20% chance that you're going to end up in the money. So you're long 200 deltas now. You're not in the money and long 1,000. You're only long 200. But if the stock stays here, this 200 is going to be zero. Hey, the stock rallied to 2050. The options rallied. Now we're at 65% delta, 650 shares. Oh no, stock dropped down. Now we're down to 300 shares because time is coming out so quickly. But because time is coming out so quickly and the gamma is so darn high, that's what's making the delta fly all around. So we're at 1950, only a 30% chance of being in the money. The stock rallies to 2030 with only 30 minutes to go until expiration. Now the delta is 60%. Because there's a 60% probability that we get above 2030. But what happens during expiration? Oh no, 1980, it's worth zero. Our position is worth zero because we're not in the money. So we went from having long 600 to having no position because the market went from 2030 down to 1980. Now, if it would have went to 2020, now we are 100% in the money and you are long 1,000 shares of stock. This just shows the sensitivity of that delta going into expiration. And the sensitivity of the delta is because theta is coming out of the options, which makes that gamma super high, and the gamma is how fast your delta is going to move. Again, you may have to watch that back. It's a really, really important lesson. Really good question in the Discord this morning. I thought everybody could benefit. It's a question that we've answered a few times. I'm actually just going to show you the answer. I thought it'd be easier. So here's my answer. You'll be able to see the question. Let's say 20 strike calls. Okay? We're long one of 20 strike calls. Okay? This is the same as being long 100 shares. Once in the money. In the money. So when long one call, it's the same as being long 100 shares. Once in the money. Okay? I'm going to cross it out once we get through it. If you own one call, long one call, it's the same as being long 100 shares of stock. It's the same thing. Long one call from 20, it's long 100 shares. Except when you're long a call, you have the option to be long. All that means is if the stock expires at 15, you're not going to take that option to be long. It's worthless. It's worth zero. But if the stock's at 25, heck yeah, you're long 100 shares from 20. So we know that, right? If you own one call, it's the same as being long 100 shares. What happens if the stock goes to 21 and so we sell 30 shares of stock? Okay. So we sold 30 shares of stock. Your position is now long 1 call and short 30 shares. Let me just clean this up a little bit. That Sweet George Brown. Harlem Globetrotters were so good at one time. All right. So again, you're long 1 call on the 20 strike. The stock goes to 23. You could sell 30 shares. So now your position is long 1 call at 20, short 30 shares at 23. If the stock expires at 25, how do we do? Well, think of it like you're long 70 shares, right? So if you're long 70 shares, you make $350, 70 times 5, 20 all the way to 5, right? Except on this 30, 3 of them, you make $3. So you make $90 there, 440 total. Very, very important lesson. This is one of those that we talk about in Discord all the time. I can't stress enough learning what your options are. Okay, you want to learn what your options are in the market. Apple, I covered Apple last week. I am so bullish on Apple. The reason why I'm bullish on Apple is because the deal they cut with ChatGPT. What I think is going to happen is it's going to be very, very similar to Apple rolling out the App Store. But instead, it's going to be Apple is going to use ChatGPT. Going forward, they're going to use whatever the best AI platform is, whoever is going to give them the most money. Apple has now in control. I love being long Apple. Something you may consider is cash secured puts. What does that mean? A cash secured puts is, hey, maybe you sell these 200s, you collect that credit, but if Apple falls down to 200 or lower, you have the cash in your account because you're comfortable getting long Apple from 200 or from 190. It's a really, really good approach when you're uber bullish a name. Cash secured puts. Finally, Rainmaker season is here. We just finished a 50-minute presentation all about earnings advantage. Head over right now to mastersinTrading.com/earnings. That presentation is still up. It is a good one. Please watch it. You'll learn all about the history of my ping pong playing, along with how we trade earnings. It's a really cool video. Go watch it. mastersinTrading.com/earnings. For everybody in the all access portfolio, let's go over one of our divergence trades. We'll do that. You guys hang on. For everybody else, I'm a big believer. The creative trader wins. Trade smart. I'll see you live 11 o'clock Eastern time tomorrow.